A lot of people ask me when you should use a money market account and when you should use a unit trust. So ordinarily, a money market account is great for short-term money because it's safe. It's not going to move. It's only going to increase in value according to whatever the prevailing interest rate is at the time. Unit trusts are completely different. So unit trusts even have different styles that you need to be aware of. So not all unit trust looks and feels the same. So you get a unit trust that's very conservative in the way that it behaves, and then you get a very aggressive unit trust, a fund. And that is generally something that you would use for a longer term investment. So your money market is almost like your plotter. It's great. It's great for short term, 1 year, 2 years. But if you really want to make meaningful money, you always have to be in the game. And the game is being in the stock market. Obviously using a good fund manager and a good financial advisor to be able to guide you. But your compound interest, the real growth, lies in the stock market. And then you would be investing in a unit trust. So if you had to have for your children's education or for retirement, for anything longer than 3 years, it's this type of unit trust that we would choose for you. And your money that you will make over the longer term, and I don't want to give numbers because otherwise people hold their hats onto it, but you can go to double returns and the higher numbers. But it takes time, and it takes you understanding that markets move up and down like that, whereas a money market is vanilla. It just plods along. So always important to understand what your goal is and invest according to your goal. Hope that helps.